Good afternoon, everybody, and welcome again to our crypto and blockchain series. Today, we have a very special guest, Jason Rex. Jason is the Chief Operating Officer for the world's first single-tenant net lease security token fund. And we're going to be talking about the fund on blockchain today. And welcome, Jason. I really appreciate you being here.
Yeah, no, great. I really appreciate the invite. Excited to talk to everyone that listens to your podcast.
Thank you. Thank you so much. A little bit about Jason. Jason is a 13-year commercial real estate executive that has completed over 1,000 lease transactions in his career, skilled in all aspects of net lease operations, development, construction, management, and leasing. Recently led a $500 million private REIT portfolio throughout the US. As COO for the Liberty Real Estate Fund, he focuses on asset management, selection for acquisitions, and strategic direction of the fund. Welcome again, Jason. I'm super excited to talk to you today about the Liberty Fund and what made you decide that you wanted to create this fund on blockchain.
Yeah, it's a bit of a story. I'll try to keep it short. My partner and I, Michael Flight, we were at one point syndicating shopping centers. This is 2018, 2019 timeframe. And a couple of things that we noticed were really picking up and creating headwinds for the shopping center space. In particular, a lot of these big box anchor tenants had a lot of debt. You look at their balance sheet, things were getting really, really scary. And then we were seeing the trends go towards more online shopping. So less in-store brick and mortar and a lot more online. And with those two headwinds, we thought it's really getting difficult to underwrite properties where our sweet spot's really at. And so we said, why don't we take the most stable pieces of the shopping center, which are these out parcels that are occupied by single tenant net leases. And the reason why we love these so much is that they're always in high demand from investors and from tenants. So they have the highest occupancy rate versus any other asset class. So why don't we bundle these together? Instead of syndicating the entire shopping center, just finding the sweet spot of the shopping center to provide more of a stable investment for investors. So that's really, I guess, the philosophy behind the real estate. And once we started and I'm going to be fully honest, I was very apprehensive about the blockchain. And in large part because I wasn't educated. And I thought it came with a negative stigma. My background's way more institutional. So, I was working for Morgan Stanley and some other very large developers, and they wouldn't touch this kind of stuff with a 10-foot pole. It was very early days, but Michael kept on me, kept convincing me to get more educated, read a few books, talk to some experts. And when I really started to understand it, I thought, wow, every syndicator is going to be doing this. It's just a matter of time. And the reason why it's so fun is that it creates all of these flexible options for investors.
That's true. Mm-hmm.
And for me, our goal is to provide really the best experience for the investor themselves. And so we thought this was just a natural fit. It sounds really easy in concept when I'm speaking out loud to you, but this was a few years of really digging in and truly understanding the regulations behind this to make sure it was safe. Making sure our accountants understood it and finding the right strategic partners to not only tokenize, but also keep operations when it comes to organizing cap table management, et cetera, and also, net asset value. So we had to find a marriage of all the right players that are in the space that knew what we were doing. And we're really, really excited about the product that we're delivering. We think it's just the beginning. We're probably in the very first inning, but you'll start to see more and more funds like this or individual assets syndicated like this over the next decade.
Wow. And you use the terminology cap table management when you were telling us about your fund. So what is exactly cap table management?
Sure. So think of it as a ledger detailing out each one of your investors, how much they invested in, when do we give them distributions? What's the back end promote that they receive, et cetera, and making sure all of that is obviously in sync as possible and organized and secure as possible.
Okay, so is it like a replacement of the traditional PPM, or is it like addition to the PPM?
So it's your tried and true, nice and boring, very long PPM, just like the ones that I'm sure you send out to your investors and all of us that are invested in the private space. So it's really no different outside of a couple different provisions that are inside that PPM.
But it gives you more flexibility, as I understand. People who are investing in your fund or in the crypto and blockchain, so they have the flexibility to exit at any point after 365 days. Is that true statement?
That is correct. So we'll talk about all the fund advantages, but folks can come into the fund with various currencies. They can select distributions that we send out monthly in various currencies, and then they also have the ability to trade after the 1-year lockup period on a secondary exchange.
The cap table management is less work for the sponsor or the operator if it's set up initially correctly.
That's absolutely right. And that's why we have to find the best strategic partners that are very fluent in this space and that do it at a very large level to where we can all feel comfortable to obviously have them in control of that cap table.
Interesting. So do you feel any difference between the fund, the way the setup is now versus the traditional fund structure? Can you shed some light on that?
Sure. The nice thing about our fund, and again, it's only at the investor's option when they want to opt into this new technology. In other words, they could come into it just like any other private fund, just like any other syndicated property, come in as a true investor, just like in one of your deals, Vinky, and basically just go along for the ride. So it's really their choice to opt into it. And the process to do that is very easy from their dashboard. I would say the most complicated thing looking back, it's most likely the education piece. Mm-hmm. And I also think blockchain and cryptocurrency, these are for a lot of people, these are very complicated, complex items to kind of think about and decide on. And there's a lot of jargon that's used. You get a lot of tech people together and they don't really, I've always said this, blockchain and crypto, the worst thing about it is they have kind of an image problem. They have a marketing issue because they have this very complex language. And until you truly understand what these words mean and kind of associate it with very simple things, it's hard to get your head wrapped around it. So really it's the education piece to the real estate investor that, maybe they're interested in this, or maybe they just want to have like a traditional fund. It's just that extra few steps to make them comfortable and make sure that this is not Dogecoin, Shiba coin, something that's trading with no value behind it.
And plus, crypto is, I would say, the blockchain is hedge against inflation or the currency that we have, the fiat currency in today's date anyways, I would love that if you can share with our viewers, how simple the blockchain is. It's just like a ledger, but it's like at a larger, bigger scale ledger. It's immutable, once the record is written, it's immutable. Nobody can change it. We just wanted to understand from you the most simplistic way, if you can help us understand your understanding of blockchain or how to create a fund on blockchain. Mm-hmm.
I think you used the word that I always go back to. It's just a digital ledger. Mm-hmm. We all use cloud services, right? We use a very complicated, I'll show, for those of you that are listening, probably can't see this, but here's my iPhone. It creates all these things and we can save it on a cloud. All blockchain is a digital ledger, and it's already being utilized by numerous companies. with or without your knowledge. One of the people that I think can look at as like an icon, Mr. Bogle, the founder and CEO of Vanguard. Look, they use blockchain technology to keep track of all their information from their investors. So it's no different. It just creates a digital ledger. And you brought it up. Each one of these items is on the block is going to be third-party verified, and it's there forever. I mean, I think about all the realistic applications that could be used for blockchain. I mean, buying a house. So instead of having to get title insurance every time, if it could just be saved on this blockchain ledger, along with the original, blueprints and permits, et cetera, then it'd be very easy to transfer ownership to new parties. And that's ultimately what it is, just a nice, clean digital ledger that's third-party verified.
Great. So can you walk us through, when you're working with investors, how do you work with them and how they invest in your fund, which is a digital fund now, I would say. Can you give us one example?
Yeah.
What does it look like?
I'll go over our most recent offering. So for November, we have bundled 6 properties together. Each is in a different location. We like the smile states. So these are the areas that we see population growing over the next decade. So Texas, Georgia, the Carolinas. We like parts of Tennessee. These are also tax-friendly states. Florida is another big one for us. And so we like very defensive types of tenants: gas stations, auto service, medical and pet care, daily needs like a Dollar Tree, a CVS, a Walgreens pharmacy is also a big one for us, and then grocery anchored spaces. So, the Aldis of the world, the Tractor Supplies, and then we're even looking into telecom, which is, AT&T, Verizon. These groups have the best real estate in these given markets in areas that we call the nexus, which is basically the main thoroughfare for most retail activity within a given market. So imagine a whole bunch of vehicles driving by per day, a whole bunch of households nearby that need these everyday services. I imagine, Vinky, it's very similar to apartments, right? Apartments probably do really well when they have surrounding really good retail. They have access to main arteries, right, to get to and from work, and there's a grocery store within a reasonable distance, things like that. And you're looking for the same thing that we're probably looking for, which is you want really good, healthy local economies with population growth that will obviously occupy your apartments or need these everyday customary, needs and services from the surrounding retail. And so this 6-unit portfolio, we buy this as a bundle, but very simple, right? It's like imagine buying 6 homes at one time. These are all currently occupied. Most of the tenants that we end up working with and buying the property from are very large corporate credit tenants. So, an example, we've got Exxon as one of our tenants, Dollar Tree, CVS. These are the types of groups, so multi-billion-dollar market caps. And the spaces are already leased, right? So we buy these buildings. They may have a 5-year lease, a 7-year lease, or a 10-year lease left. So you get very nice, predictable income streams forecasted. And then what's also really neat is the type of lease structure itself is called the triple net lease. So tenants have to pay the property taxes, the property insurance, and the maintenance on the building. So if these things go up, they get passed on to the tenant to pay back directly. And you really can't have any better credit tenants than the ones we're trying to go after. And exclusively the types of businesses that these run, these essential businesses that ironically have performed very well during COVID as well. And that are positioned to, in some ways, perform better if we are in a down market versus an up market. So we walk them through very similar to any other private investment. We go through the fund prospectus. We talk about the individual buildings, the return profiles and sensitivity analysis, kind of an idea of a 100K investment breakdown, talk to them, educate them about the blockchain component and all the advantages that brings, which I think we can dig in more in a little bit. And, ultimately, if they're comfortable and they're the right fit, we'll send them over a private placement memorandum, a subscription agreement, and all of this can be done. What's really neat, our provider that issues our investor dashboard, you can go to our website, click the Invest Now button, and create an account, and it will literally take you through a very futuristic, what's known as KYC AML, which is Know Your Customer, Anti-Money Laundering. So it uses either your dashboard or your screen from your phone to do a 3D image of your face to make sure you are who you say you are. And then we go through the accreditation process. We are what's called a 506C as in cat, Regulation D. So we have to make sure that the fund is only going to be available to accredited investors. And once we have them onboarded through that sign-up process, similar to you, wire funds to our bank and use those funds to acquire the portfolio.
So a couple questions. Since it's a 506C deal, how important is it to have the KYC and AML in place?
Well, so, it's vital for what we do. We need to make sure our fund that we have issued is only for US accredited investors. So we have to get this basic background information. I can tell you, I've been invested in multiple other 506B, B as in boy. It is nice not have to going through that process. So it's a little bit of an extra burden on the individual general partner and the syndicator side, but ultimately we do it for everyone's protection. And, obviously all of this information is kept strictly confidential with only us and our third-party provider. And we try to make it as seamless and easy as possible. Having like literally a picture that you can use from your phone or from your desktop to make it very quick and simple. So we send over, either a driver's license, a passport, and just scan a photo of your face and you're all upboarded.
Yeah, interesting. And by the way, KYC is know your client or customer, and AML is anti-money laundering. Tell us a little bit more about the KYC and anti-money laundering, how it plays a role in the blockchain arena.
Yeah, so we want to make sure, and this gets into kind of another avenue, the way that we can transfer ownership into these funds, right? So if you want to sell a portion of this fund after the 1-year lockup period, make sure that you're selling it. We confirm your identity. That way we can literally make sure via what's called a smart contract, which is just a transfer of ownership via one of these digital contracts to the buyer. And so we have to make sure that you are who you say you are, and that you're selling it to another party that says, hey, I'm this person and I am who I say I am, to make sure that that contract is succinctly done and it's done per local, or not local, but per regulation.
And there is no security issues with that, right? Because when people are uploading their personal information to blockchain for the KYC, the customers or the clients who you are dealing with. And
Correct.
These are the permanent records, immutable. So more
Yeah.
security, right? There's no
Absolutely.
reason to worry about anything.
I think about it in the early days of like eBay, right? You buy something, hey, I'm going to buy this really nice handbag. I think my wife did this one time. Oh, I'm going to buy this really nice handbag. It's from this designer or whatever. And then you end up you buy it from this person you don't know, and they send it over to you, and it's not the correct thing that you purchased. Those were kind of the wild west days. Now through KYC AML, it's another layer of protection, making sure that we can transfer that ownership correctly, and that both parties know who the other party is. And then the one thing I will touch base on is when we want to make sure there's some regulations around certain folks in certain countries having ownership of the fund. And so we have to make sure that, you know, folks in certain parts of Russia, Iraq, some other areas that were strictly prohibited from trading tokens to, does not get their hands on this for the SEC regulations.
Which is a cool feature in blockchain because you know the origin of the information.
Yes.
Like where it originated, I mean, any kind of information. So that's why I would say it's more reliable. It's just like a matter of when you're ready to embrace this new technology.
Correct. And you keep in mind, these markets aren't like buying and selling stock on an exchange, right? So you're buying and selling from individual people. So you want to make sure that these people are real and they have what they say they have. And so, you know, that again, just that extra layer of protection to go through KYC AML is vitally important.
Exactly. I think it's going to be a huge paradigm shift when a lot of people are going to move on to blockchain. I mean, it's growing anyways.
No, it's gaining a lot of momentum. You know, we see these digital ledgers or these blockchains used on so many different facets of our lives. We've already seen, I speak from firsthand knowledge because I used to be in, you know, I'm still in the retail space, but I used to be mostly focused in shopping centers. You know, I'll tell you what, technology eats everything. I don't care if it's movies, if it's, you know, if it's music, if it's retail, it's disrupting in every facet of our lives now. A lot of things with it are fantastic. I just don't see how you can slow the momentum. There's just too many things that this technology can be used for. And we see it as like the building blocks for the new economy. And I say this even with, you know, the Fed has been announcing now for the last couple of years, they're trying to create a US digital dollar. So where's that digital dollar going to trade on, everyone? I mean, it is what it is. It's going to be blockchain enabled.
That's correct. And you said you're in the REIT space. So can you tell us about that too?
Yeah. So I'm not an anti-REIT person. I think, you know, I know a lot of times in the private syndication space, a lot of people aren't very high on REITs. You know, REITs get a kind of a bad rap, but for the majority of like the everyday investor, getting REIT exposure is fantastic. And especially if you're only trying to get a small fraction of ownership in certain industries, right? So if you want to be in storage, if you want to be in car washes, if you want to be in, you know, medical specifically, you can get exposure, you know, into that individual sector versus trying to find a private syndication to do that. And obviously the markets are liquid. The issue with REITs, in my opinion, is they're not very tax efficient. So they're required to distribute the majority of the profits in the form of dividend income, which is great, but then you have to pay ordinary income on those dividends. The regulations behind being a REIT are so complex. I always say, you know, the biggest expense and the biggest time suck for us in the REIT space is just the accounting front. And we have to be so dialed in. There's so much bloated overhead. And you look at, you know, I use this analogy all the time when I talk to people. When COVID happened, there was a massive ripple in the stock market, as most of the viewers know.
Right.
We were seeing REITs across the board down 25%. And I want to ask you this question because you're in the space. What happened to your cap rates in multifamily during this time? Did they lose 25% of value or did they get more expensive?
Yes.
Compressed. So there's a disconnect between real value in the private markets and value in the public markets. I want to get as close as I can to owning that physical asset. And that's why I love the syndication space. It's just more tax efficient and you have more direct ownership. In a REIT, you've got an army of individuals. You get access to probably some of the best properties in the United States, if not the world. But there's a lot of mouths to feed. There's a lot of compliance, regulation, and red tape. And all that equals is less return to your pocket.
I agree on that.
And so, but, you know, with that being said, I think it's a great vehicle for certain folks that, you know, maybe are more risk averse or don't know enough about the private syndication space. I think education is an investor preference. I'd rather have my money owning all private real estate versus owning a REIT or any other public stocks. That's just me. I'm just built that way mentally, and from a psychological standpoint, it works for my investment strategy. But without doubt, REITs do have their advantages, just given the highly liquid nature of your position of ownership.
Yeah, I mean, you said two things very well. The number one is you said the education. Education is very important, because if you do not have enough education or you do not understand the concept, what is out there, it's very hard to make a decision. You're hesitant to take the risk. And the second part of the education is the risk. And the risk, your appetite to risk is the profit. And more the risk, more the profit. But again, you're willing to take the risk if you understand the concept behind it, why I'm doing what, Yeah. So if you wanted to play conservative, the return's gonna be conservative as well. So you said it very well. Thank you for saying that. And now I'm gonna go back to the deal on the blockchain, the triple net lease. So
Sure.
So let's say I'm an investor. I invested with you now in your Liberty Fund, which is on blockchain. It's tokenized. So what do I get once I sign the PPM or once I get on your cap table? So what do I get? Like, do I get a token or a coin or what? How does that work?
No, I thank you for bringing up this question. This is really important. So when you come into the fund, your ownership is not tokenized. You are essentially an investor, just like in every other private syndication, just like your properties that you syndicate, Pinky. So the exact same process. After a period of time, let's say 2 to 3 years has passed, and you go, you know what? I would like to tokenize my share at this time. All you have to do is connect your digital wallet, and my third-party company, which is called the registered transfer agent, will tokenize your fund's ownership into a security token, which is a security token is just a digital asset. So we just basically, your ownership stays the same. It's just digitized.
So it's digitized, but until then, it's gonna be the US dollars.
Yeah, so until then, it'll just be like any other traditional private syndication. You will come in with dollars, and you will get dollars distributed to you monthly.
So let's dig down a little bit further. So once, let's say I decide, okay, I wanted to tokenize my share and I wanted to take a portion of it, maybe I'm gonna exercise it or sell it in the open market. How does that work?
This is a great question. So there's two things that are going to happen once you essentially tokenize your ownership in the fund. One, you have the option to select your monthly cash flow distributions in US dollars, Ethereum, or a US dollar stablecoin, which we refer to as USDC. Now, you can get that ACH, to various different, DeFi wallets, etc., at your choosing. And then when you're ready to actually sell a portion of your ownership or all of it, there is just really simply an icon on your dashboard that enables you to list your token on a secondary exchange. So one way to do it is just to post it online on this exchange. It'll all be done for you nice and easy on your dashboard. Think about it as like a Fidelity account, right? You post it out there and you get bids from other parties that may want it. Or Vinky, you could call me. Let's say you had an apartment that you had tokenized, and I'm shopping around and I want some multifamily exposure, and I really like that deal of yours in Houston. You could call me and say, hey, Jason, I'm selling a portion of my ownership. Would you be interested to buy it at this price? And I'd say, sure, send me over some information on it. Okay, I like it. Perfect. You go ahead, you get on the secondary exchange, we'll transact it, nice and easy. Here's the price, I'm gonna send it over to you. And instantly, whenever I buy it, There's no holding period. There's no 3-5 days I have to wait. It's like instantaneous, the settlement time. So when you sell, let's say, a REIT on a Friday afternoon, you know, you may get settled up on Monday of next week. No, you and I can trade on Sunday, on Saturday, from wherever, whenever, and then it settles almost instantaneously.
Nice. And I get that money, whatever the funds, in crypto, right?
Yeah, it could be, absolutely. It could be in crypto. It could be in a number of different currencies that you're choosing. Most of it's going to be converted into US dollars or USDC, which is just the US dollar stablecoin. It's just a digital dollar.
And then once I do that, I have the option. Either I can just exchange it with other crypto, like maybe buy a Bitcoin with it. That I can get exchange an Ether coin, anyways, Ether or USDC, the stable coin. And what was the third one? I forgot. I'm sorry, you didn't.
So US dollars, ETH, which is Ethereum, or USDC, which is
USDC. Yes, exactly. So I have the option to purchase any other crypto, or I can just convert it into US dollars and just bring it back to my bank account. So I have the option to do that.
Well, and here's a really cool feature. Let's say you tokenize your ownership that you're choosing when you want it, and you started accepting, let's say, a US dollar stablecoin. You can borrow against that position.
That's true.
Which is really exciting. Can you borrow against your position in a private fund?
No.
No. So it opens up the different, again, it's all about optionality. It's, for some people, they're going to hate this. For others, they're going to really like it because they want to have that flexibility, but they want all the private real estate ownership benefits, right? The K1, all the depreciation, interest deductions. You know, you get all the advantages of a private fund, but then you have this really neat technology wrapper that enables all these other options that you can play around with. And if you're a dork like me, I love options. I like the idea of being able to borrow against an appreciating asset. And, you know, I like the idea of, if I need, you know, once in a life, let's say Vinky calls me and it's like, Jason, I have this no-brainer. It's a 40 IRR. I'm going to be like, man, I want a piece of that deal. I need to sell some of my other stake so I can invest in this one. You have all of these options available to where if you're in a private syndication, you're basically married to the sponsor for as long as they own the asset.
That's true. That's true. And when you're borrowing it, you just like, you know, kind of multiplying. And then when you're borrowing funds, you can invest into crypto or something. And then you're making money of that too. And I think it all depends upon your vision, what you wanting to do. And again, the knowledge or the education that you were talking earlier, and the risk appetite, you know, how much risk that you're willing to take. And again, that completes the circle, because I'm going to go back to, again, it's going to depend how much you know. You know what? It's a circle if you look at it.
It really is. And we kick ourselves, we want to kick ourselves, we laugh about it internally all the time. We have this really stable single tenant net lease property fund, right? These are, you know, there's not a lot of value add that we can do with these. They're very stable, high occupancy, you know, good returns, but not robust returns. And then we marry it with something that people look at as very risky and they don't know. And so it's very unusual that you have something like that in the blockchain space, something super stable and creditworthy with this new idea and concept. You know, sometimes we think, should we have just bought apartment buildings or something else with a higher return? But really, we think that this is just the beginning, and so many other people are going to be adding this type of language in their PPMs just to give them the flexibility, let's say 5 years from now, to where they can, you know, a sponsor can provide this optionality to investors as the market kind of moves in this direction.
Interesting. So in that case, they can just, they should be able to tokenize their portion of the share, whatever they have, the equity in the deal. And that's outside of a fund too, because you have a fund structure created, right? So everything is happening within the fund, and then you already have a set PPM or the set structure, like how much they're gonna get, right? According to the fund. But you think for the regular deals too, that's the operators or the capital raisers who are working outside of fund, they will have opportunity to do that as well, right?
Absolutely. I think it's a lot easier to tokenize one property at a time. The fund concept opens up other complexities that have to be accounted for. But I think the single building tokenization is probably going to be the next path of progress. And then I see it ultimately growing into more fund structures.
Yeah, and I think it's kind of, we're kind of doing the similar scenario anyways. We're breaking down into the units. So it kind of relates to that. If you later on, if you want to tokenize it, so it's going to work kind of similar way. Okay, if you have invested 100,000, you're going to have 10 tokens for this property, which is equivalent to 10 units, what was in the traditional ways defined in the PPM. Is that correct statement?
That's absolutely correct. Yeah, that's a great add there. So getting back to units of ownership. So if an investor came into your recent really attractive Houston apartment deal, and let's say one unit was $100,000, and they wanted to trade that unit down the road, that's a big chunk. So we think about unit sizes as it relates to how many people can fractionalize and sell these individual tokens. So it's important to kind of think about that process early on if that's something that a syndicator would be interested in doing into their PPMs over the next couple of years.
Great. Wow. I think this was very informative session with you, Jason. So any last piece of advice that you would like to share?
Absolutely. We a couple of things. Every year we're hosting the Real Estate Blockchain Summit. And it's a whole bunch of real estate minded people, but also connected with blockchain and kind of talking about the future. So we have a really, really nice recording of that. If you go to our website, the Real Estate Blockchain Summit, we had it last year in Austin. We may do it in Miami the following year. And then our website, we have so much free education, and we're kind of talking to, all the other players that are in this space, and we kind of share ideas and concepts. But we have podcasts, we have articles, we have a white paper on this at our website. If you're interested in learning more, just feel free to go on there and peruse everything we have. We've got a couple of really nice videos that also talk about this that are free to download.
That's great. So can you tell us your URL for the website?
Yeah, sure. It's libertyfund.io.
Jason, how can people reach out to you?
Yeah, sure. Feel free to go to our website and schedule a call. It'll go directly to my Calendly link for a phone call, or you can always email me at jason@libertyfund.io.
Thank you so much, Jason. I think this was very informative session. Like I said before, I really enjoyed talking to you.